Hi there and welcome to this ET Now special. I'm Nayantara Rai. So what to look forward to in 2022? I think we can really easily, safely say fintech. India's pioneering fintech, and we're going to be talking about that and more with two guys who used to be co-founders of a startup, which then they sold in the most expensive sellout that was back in the day. They're now pursuing their own dreams. Amrish Rau is with PineLabs, and Jitendra is following his dream with his own digital bank, Jupiter. Welcome, guys. Thanks for agreeing to do this. I know you both used to work together. Are you still both best of friends, thick as thieves?
Yeah, I mean, in the case of Jitendra's age is catching up, but I'm still young, so I tend to go and meet up with him every once in a while.
Yeah, thanks, Nayantara, for the invite of the show. But yeah, we're still sort of partnering together on a few ventures. So we in fact recently set up a fintech fund, where we'll be focusing to invest in fintech together.
Absolutely, and I'm going to get to all of that in just a bit. Now, in the 90s, it was Bill Gates who said that you're going to need banking, but you may not necessarily need banks. At that time, I think the 1990s, everyone was like, what is Bill Gates talking about? But that prophecy seems to be coming true. Would you agree with that, Amrish?
Yeah, look, I think the next 5 years in this space is going to be very, very exciting. And what we are going to get to see is banks will start to behave a lot more like fintechs, and fintechs will start behaving a lot more like banks. Now, what you're going to get to see is fintechs are going to have engagement, consumer engagement, while banks, because they hold deposits, will have a lot more of profits and great financials to themselves. However, what has changed as compared to 15 years back is access to capital has become fairly easy to fintechs. So what you will get to see is fintechs will be able to counter the positives that the bank has. That is a great balance sheet, a great financials. Fintechs will use a lot more of their capital. But as fintechs accelerate and get into the banking space, banks will also need to start building out engagement tools with their consumers. Who wins first? Who moves first? I think that's going to play out over the next 5 years.
Jitendra, coming to you, this is a year where a lot has been said about will fintechs eat into the market share of banks. Now, you're seeing banks also react, right? Whether it is a Kotak or an ICICI bank, which recently hosted analysts to talk about its digital transformation. How do you see this panning out?
Sure. So, Nayantara, the way I look at the market is today in India, there are more than 40 mainstream banks. And then we have like banks like ICICI, HDFC, Kotak, who I must admit that coming up the curve aspirationally to progress on the digital transformation. And I can clearly see the Indian banks are far more progressive as compared to the Western part of the world. So that being said, I think if we sort of leave apart these 3 or 4 banks who seem to be progressing well, the other 45, 46 banks are just not moving. So, and when we look at the market share of these 3, 4 banks, that's like less than 20% together. So from the opportunity standpoint, I see a large opportunity up for disruption, where the other 45, 46 banks will in some form and manner get disrupted, both from a consumer deposit standpoint, credit access standpoint, or the SMEs deposit and credit access standpoint. So I think that's the way I see the market. That being said, when we do our surveys to build our products internally, to our surprise, we are seeing a lot more customers coming from these top 4 banks. So that's the reality which we're seeing today. But my hope is that these top 4 banks will evolve in their journeys.
But Amrish, there has to be, while we've seen collaborations is seeming the way to go right now, and everybody trying to figure out what it is, right? We're in uncharted territory, like PineLabs is also, for example, doing it. Every fintech is collaborating with banks. Banks are trying to collaborate with fintech. So, while that is figured out, the question I have for you is, we still don't know the regulatory hurdles that could come for fintech in 2022, right? You started to hear noise from the RBI, whether it is to do with digital lending. We don't know whether there'll be capital adequacy ratios that could come in. Is that, how big is that threat? Is it a threat also?
Look, I have to tell you that when I see, you got to take everything as a package, right? And when I look at what RBI has done over the last 5, 7, 10 years time, I generally have been in the camp that there are more goods than bads. And of course, there are some things which are a botheration to fintechs, but there are more goods, and I can very safely say that there are more goods. In fact, one of the things that I've talked quite a bit is I was quite surprised with when RBI was slightly delayed when it comes to digital banking. And now you've seen a white paper out. There is a conversation which has been created on the digital banking side. I do think digital virtual banking is going to come in, and RBI is going to support that. RBI in general, some of the measures that they have taken to protect the Indian consumer has actually helped to grow the marketplace. I think what we really need to focus on at this point of time is, are all the various stakeholders equally incentivized to grow this entire digital payments pie? We are getting to see that banking systems are creaking under the huge volumes that UPI is driving. Somebody's got to manage that. Somebody's got to be able to fund some of these expenses out there. So I think more than regulation, I think there is a conversation to be had which brings in all the various stakeholders and ensures that there is enough for all the various stakeholders in any digitization that we will want to drive over the next 5 years' time.
Jitendra, do you want to come in? Because, your dream is to basically say, why are we still having banks the way they used to be for almost a century, if not longer?
Yeah, Nayantara. So, like this whole discussion paper which just came out by Niti Aayog, and seems like our regulator is also supportive of learning what the comments are being presented based on the discussion paper. I think the way I see that overall, and Amrish rightly said, overall our regulator has been very, very, I would say, measured not very aggressive, not very conservative. And I think this, I remember in 2009 when RBI introduced second factor on each transaction, there was so much of hue and cry. But fast forward 10, 11 years, we see that whole digital payments grew because of the trust that my card cannot be misused because I have the control of my transaction. And I think that trust kind of was needed. And now when you think of like, can I take that second factor away? I actually can't think of a transaction, the second factor going away from the transaction, because then I won't be trusting that website. So I think that is the evolution journey which we have seen. From the banking side, I think we are seeing something similar where we at Jupiter we launched a digital bank in partnership with the bank today. We have kind of informally being engaging with regulator to make them understand that how we are doing it, what are the benefits customer is getting out of this, what is the service level we are able to provide to the customer, and what is the data privacy and data security standards we are following. And I think the signals which I see from the regulator is that they seem prima facie supportive, and I think they also kind of learning in a measured way, saying, okay, is it the right time, or should we sort of wait for a year or two? But the whole wave is inevitable. I think that is given. I don't think so. RBI is diffusing that there's no need for digital banking in market like India. I think 4 years back, it was different. They were in the other camp. So fortunately, they have come a long way. And so we are really looking forward to it in terms of how things pan out in next 12 to 24 months. but
Right.
looks like the winds are in our favor right now.
We've seen mushrooming of so many fintechs. There is serious capital that is backing up, and now you have new trends, right? Like buy now, pay later, for example, is not just becoming a rage in India. It's a global rage. I know all of you keep saying that there is no catch, but a skeptical, or maybe this profession has made me cynical. There's nothing like a free lunch.
So Nayantara, the way I see, if you look at the credit market in India, there are consumers, and we have population of 1.3 billion. Let's say, in my view, the market, the people who are really eligible as per the current appetite for credit, I think there must be like at least 400 to 450 million population. So I see no reason why the credit card should be provided only to 30 million consumers. What that means is you got to look at the underwriting, you got to look at the segment of consumers very, very differently. And if you want to give everyone a $2,000 line or a $4,000 line, yes, the market will become smaller and smaller. But there are ways where you can test out the consumers at $200 line or a $300 line, see whether they're good with their credit behavior, and then you graduate them to $1,000, $2,000, $3,000 line. And I think BNPL effectively is doing that, the buy now pay later proposition, where they're giving access to credit at large to the young consumers who otherwise will never get a credit card or a loan because they don't have a credit history. They're first time into the job, they're working in startups, they're working in the tech industry, where banks don't want to deal with those companies or those employees for the loan requirement. And this is where fintechs are coming in and addressing that or filling that gap. So I think I see this as a real opportunity, which is happening in India. And yes, we have seen few instances which are worrisome in terms of how people adopt the interest rate practice in a hidden way, or a collection practice which is not acceptable way. But barring apart those few instances, in general, I would say that this product has been a great outcome for a market like India, and globally, rightly so, we are seeing. But for the work which fintechs are doing in this space, in my view, I think they are here to stay.
Amrish, you told us a lot that we can look forward to in 2022. What about the PineLabs IPO?
We can look forward to it in 2022. I'll leave it at that one. But look, let me go back to the broader question that you asked, right? Which is what to look forward in 2022. If I was to talk about two major themes, which I find very interesting, is I think with where UPI is going, or what is called as real-time payments, where it is going, I think it's going to open up many new areas. Just over the last 3 months, all that the RBI has done, what NPCI has done, RTP and UPI is going to open up many new areas. IPO finance, IPO purchasing is just one example, but I think bulk payments will also come on the UPI platform. Many new opportunities open. So real-time payments is very exciting. Second is, we are going to get to see embedded finance and embedded insurance everywhere. Everything that you and I are going to do, we are going to be seeing an opportunity to take a line of credit to do that, protected by an insurance line against it. So embedded finance and embedded fintech is going to be very exciting in 2022, in addition to the PineLabs IPO.
Which you have not confirmed or told us which domicile, but I'll get to the IPOs in just a bit. But Jitendra, come in on that. That sounds, you've seen the certain announcements from the governor as well as the NPCI. We had eaten our call date and we borrowed it from Elon Musk, UPI to the moon, whether it's to do with feature phones, whether it's to do with IPOs, bulk payments and embedded. Give us an idea of how it can work, Jitendra.
Yeah, so I think actually, in UPI, if you ask me, there are like a couple of very big changes happening as we speak. So one, what RBI governor announced recently, coming UPI on the feature phone and taking off the load from the networks to authorize each small transactions, and then causing the transaction failures and all of that. I think that is going to be a very, very game changer. And today, if you look at it, the UPI is restricted to 400 million population, and I think we have already reached 200 million population of that. Now, and in India, we have like 900 million feature phone users. I think we are suddenly see a 3x explosion in next 1 year, in my view, because of this new change which RBI governor introduced, plus the transaction speed, which is going to become faster. So I think that's the real change we are going to see. Similarly, I think you asked about the bulk payments part. I think if the UPI limits are being changed to facilitate business to business payments, that again is going to be very big change, which we will see, because today all business to business payments are happening either through IMPS or NEFT or RTGS, and the process there is cumbersome compared to the UPI way of transferring money. I think if that happens, again, we are going to see, because the volumes are large there, they're almost like 20, 30x of the retail payments. So we're going to see much more volume in the adoption happening on the UPI platform. So clearly, we are set to see UPI 2.0 phase, or the next explosive phase of UPI in our country.
We're running out of time. As I do that, because we're also a business news channel with a focus on stock markets. I remember having you earlier this year, Amrish, where you said you're tired of watching the old economy stocks on ET now, and you just can't wait for the new age companies. Well, this is 2021, turned out to be a year where we did see the IPOs, but it left a lot of soul searching to be done, just given the froth with what happened with Paytm and what happened with Star Health, for example. Would love to get your views on what happened and how it can set the stage for 2022, including for PineLabs IPO.
Now, look, I think in general, if you've seen the IPOs, more hits than the misses on the IPO front. I think there are enough and more business cases which are not being well understood. Having said that, I think the markets are saying one thing very clear: keep us excited when you go to listing. What you really can't do is leave nothing on the table back for us. And I think that's a fair ask. Look, I'm no specialist on the market, but I have spent enough time trading on the stock market up and down. I can tell you one thing, that as an investor, I would love to see an IPO which comes in and leaves some money on the table. Those businesses which have left money on the table for the new investors have had a good start. But it's very exciting, very, very early days, very exciting. What we will now get to see over the next 5 years is startups coming to the IPO market at a lot earlier a stage. When you look at some of the companies which have come in, there are 7-8 years, they've run their course in the private markets and then they come to public markets. We're going to get to see some businesses come in very, very early. Hey, look, Nayantara, if I were you, I wouldn't really focus so much about PineLabs. I would focus much more on when is Jupiter coming on the markets, because I want to subscribe to that one in the public markets too.
Tell us, we have you here, Jitin.
So I think I would say I'm really looking forward to PineLabs IPO subscription in next quarter. That's what my expectation is. But clearly, we are just building. We are like still getting our feet off the ground. So talking anything related to IPO is like so premature for us. But yeah, we will surely get there. As Amrish said, we won't take 8, 9, 10 years to get there. We'll try to get in there earlier. That's our aspiration would be.
I know Amrish was pulling a leg over there, and I knew what I was doing. I didn't fall for it. But Jitendra, I'll give you the final comment, because PineLabs has become such a big company as well. You're starting out. You've come out with some very interesting and exciting innovations. In 2022, you once told me that, we will have very different kind of products for banking and for financials. Give us an idea what we can expect.
So I think if you look at Nayantara, we launched a product which has been getting superb reviews from the market, and I was actually going through a few of the reviews literally today morning, and I was amazed. The reviews say like, we never expected banking could be that simple. We never expected like why the existing banks are not providing such a great experience on the banking app. So far, I must say that we have been endeavoring to deliver the experience what consumers really want. Now the threshold is becoming higher and higher in terms of the expectation threshold from the consumers. So the products which we are working on right now as we speak is on the lending side and on the investment side. So again, there are like hundreds of companies on both the products, but we have figured out a mode in terms of the way we want to deliver those products, the way we want to be differentiated in terms of giving those offerings to the consumers. So maybe next couple of quarters you will see that. But at core, we want to see consumers love. We want to deliver a great service, and we want to deliver the experience which is very, very contextual to the consumer and very, very personalized. I think at core, these three tenets will be there.
Okay. With that, we wish you all the very best. We have all of those products from Jupiter to look forward to. And of course, as I didn't say it, Amrish didn't say it, but as Jiten said, PineLabs IPO in the first quarter of the new year. With that, gentlemen, thank you so much. Here's wishing you all and your teams a very, very happy new year.